Hello, everybody, and welcome to another episode of the Survivor Podcast. My name is Brian Gleis with the Scott Insurance Agency. What I'm doing during this podcast is giving you tips and tricks to outwit, outlast, and outplay the insurance game. The show Survivor is one that me and my wife watched all the time when it first came out. The topic of today is deductibles. Deductibles in the world of property and casualty and commercial insurance are changing. The deductibles that the insurance carriers are allowing us to provide have all went up. When I first came into the industry 18 years ago, a $250 deductible or a $500 deductible was the norm. Well, since then, there's been a steady climb on the deductible that the carrier will allow. So today we see several things. On a homeowner's insurance policy, we see a lot of split deductibles. And what a split deductible is it's one deductible for anything that happens to your house, with the exception of wind and hail damage. Wind and hail damage is set at a higher level. So sometimes you'll see a $1,000 all peril deductible, and then you'll see a $1,500 or a $2,000 wind and hail deductible. So that's the carrier saying that the majority of their claims that happens in our area has to do with wind and hail, and they want you to take a larger stake in that claim. Now, you don't have to like it, but it's the way that it is. So if you were to look at my personal homeowner's insurance policy, you would see that my deductible is set at $2,500. The reason for that is one, I can afford it. I know that I can come up with $2,500 in the event of a claim. Two, I know that I'm going to self-insure anything below that $2,500. If anything happened, if there was a broken window or something to that effect, I know that I'm going to handle that out of my pocket because it's not going to exceed the deductible at the time of a claim. Another reason why I have a $2,500 deductible is because at that level, in most cases, I can still get a flat deductible where I don't have to worry about that split deductible of wind, hail being higher. So that's another reason why I like the $2,500 deductible. Now, aside from the split deductibles, it's becoming very popular to have percentage deductibles. Percentage of what? Percentage of what the insurance company has your house insured for. Now, a lot of your major players do this, and a lot of companies are transitioning to only percentage deductibles. So when I talk about percentage deductibles, you have to know that your deductible is going to go up every single year, because on your homeowner's policy, there is an item called inflation guard, which increases the amount of insurance on your home each year, and your percentage deductible is predicated off of the amount of insurance on your home. So you want to know that going in. Now, personally, I wish I could do this on my own, but I think there will be companies that come out that are basically going to say, hey, we'll finance your deductible for you, where you can create a little savings account for it. But forget waiting for a company to do that. Since this is a Survivor podcast, I want you to think about doing it yourself. So the first thing is we have to know that some of this is going to fall under the category of it is what it is. You can't do anything about it because the insurance carrier is forcing you. This is pretty much the insurance carriers across the board. As a broker, if one insurance carrier makes me angry, I shop the other insurance carriers we have to see who wants to play. But in this case, most of them are towing the line and everybody's doing it same. So I want you to be in the game and know that now you have a $2,500 deductible. You may not have that just sitting around. So we want to plan for it, and we want to create a rainy day fund, whether that's in an actual cookie jar back in the old days or whether it's a bank account. But knowledge is power when it comes to this. We're talking about the homeowner's insurance. Now, on the auto insurance, we haven't seen the forced increase of deductibles, but what we have seen is if you still have a $250 deductible, which a lot of companies are not even offering anymore, you are paying a handsome premium for that. So again, I told you on my house, I have $2,500. On my car, I have $1,000 deductibles. And it's for the exact same reason. I know that I'm not going to file a claim on my car less than $1,000. The problem is a scratch on any car any given day now seems like it costs at least $1,000 to fix. So deductibles are changing. A lot of times you guys might not catch that in the renewal packet that gets sent to you. It might be buried in there, or you don't make it to that side-by-side comparison page. So this is me telling you, heads up, we have to survive the insurance game. And one of the ways we do it is to make sure we know what our deductible is, pick the highest deductible that we can afford or that makes sense to us. And then we will be able to shop your insurance across the board to see who will give us the best price at said deductible. So that's it. I know it's kind of a cumbersome topic and you're like, my gosh, my head's hurting now. But it is important, and it's the way we survive the insurance game. So if you like the information here, if you think anyone else can benefit from it, please pass it on, spread the word, and we would appreciate it. So Brian Glies with the Scott Agency here on your Survivor podcast. Thank you. Bye-bye.